Welcome to the daily insights that matter. Now, the National Stock Exchange, which is India's largest stock exchange, is in the process of finalizing plans to expand the trading hours for equity derivatives. Now, the proposal involves introducing an evening trading session which may run from 6 p.m. to 9 p.m., allowing market participants to continue trading futures and option contracts after the regular session, which spans from 9:15 a.m. to 3:30 p.m. Now, there is also consideration of extending this evening session further, possibly until 11:30 p.m. in the future. Now, over the past few months, the National Stock Exchange has engaged in discussions with leading brokers and other market participants to gather feedback regarding the timing of the evening session. Now, the topic was also addressed during one of NSE's trading members' advisory committee meetings. Now, the NSE is contemplating a gradual introduction of products during the evening session, beginning with index futures and options, including Nifty and Bank Nifty, before potentially including the stock derivatives. Now, the expiration dates and the timings for all the products will remain unchanged. While the NSE intends to treat the evening session as a distinct trading period, it is proposing to settle trades made during this session along with those from the regular session on the following day, as indicated by one of the sources. Now, this move to extend trading hours is designed to provide local traders with the opportunity to respond more promptly to global events. Presently, the Indian exchange is closed before opening of the US markets, leading to this adjustment. Moreover, the extension of trading hours could potentially enhance trading volumes for exchanges, as there are concerns that some significant and sophisticated traders, including the proprietary desks and hedge funds, may consider shifting to competitors such as the GIFT City, where trading operates around the clock. Now, S&P Global Rating has decided to maintain its growth forecast for India in the fiscal year 2023-2024 at 6%. Now, this decision is influenced by several factors, including a global economic slowdown, increased risks from an irregular monsoon season, and the delayed impact of interest rate hikes. Additionally, S&P predicted higher inflation for the same fiscal year. Now, despite India's strong economic growth in the June quarter, S&P expects a less robust growth trajectory for the country in comparison to 2022. Now, India's economy achieved a growth rate of 7.2% in the last fiscal year of FY 2023, which concluded in the month of March 2023. Now, S&P revised its full-year retail inflation forecast from 5% to 5.5% for this fiscal, taking into account the elevated global oil prices. Now, looking forward, S&P projects a growth rate of 6.9% for India's economy in the next fiscal year of FY 25 and FY 26. Now, the agency acknowledges that the growth rates in the Asia-Pacific region vary across different economies and slightly increased its growth forecast for the region to 3.9% in 2023 due to the domestic resilience. Now, it highlights India's prominent position in the growth trajectory of the Asia-Pacific region. In the second quarter, year-on-year GDP growth increased in both developed and emerging Asian countries, with India leading the way by achieving a 4.2% growth quarter-on-quarter, resulting in a 7.8% increase from the previous year. Now, the Indian economy saw a 7.8% growth in the first quarter of 2023, driven by strong demand for services and sustained government capex. Now, although India's growth is expected to slow down compared to the previous year due to global economic factors and weather uncertainties, S&P remains optimistic about the country's economic prospects, foreseeing a resilient trajectory in the years ahead. It's worth noting that S&P Global Ratings growth forecast of 6% for India in FY24 is lower than the recently revised forecasts and the RBI estimate of 6% growth for the same year. In contrast, S&P Global Market Intelligence, a division of S&P Global, again recently raised its growth forecast for India in FY24 to 6.6% due to strong growth in the April to June quarter, up from the previously projected 5.9% in August. Furthermore, the OECD, or the Organization for Economic Cooperation and Development, has increased its GDP forecast for India in 2024 to 6.3% from the earlier projection of 6%. Fitch Ratings has raised its growth forecast to 6.3% for the current fiscal year of FY24 from 6%. Even with a 6% GDP growth, which S&P Global is saying, India is expected to remain one of the world's fastest growing major economies in the world. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.